has been around Keller Williams for a while now, Katie. So I'm just gonna kick it over to you. We're gonna get started. We have so much that we want to talk about, so I want to get us started. Katie, can you just give us a quick bio of you? Tell us who you are. Um,
Yeah. All right. So I am Katie Broskey, and I am from Berks County, Pennsylvania. So I am the Keller Williams office, Keller Williams Platinum Realty in Wyomissing. So we are in Berks County. If you don't know where that is, it takes, depending on traffic, maybe hour and a half to get to the Philly airport area. So if you see like Reading pop up, I always tell people Berks County is kind of funny because it's like every town appears as Reading, but they have a different zip code. So it's like Reading, PA 19601, 19602, 19603, 19604. So people not from the area think of like, ooh, Reading City, but it's not. So Berks County area. I am a solo agent. I live in the Governor Mifflin School District in a town called Shillington with my husband Matt and my two daughters, Addison and Natalie. Addison is 7 and in second grade, and Natalie is 2. So they keep me very, very busy. My husband Matt is a I know. My husband Matt is a elementary school principal at Olive Valley School District, and he's been there since he graduated from college. Um, Matt and I met at Shippensburg. So if we have any Shippensburg grads out there, that is where I got my undergrad from. I was a high school business teacher for well over a decade. I taught grades 9 through 12 high school business courses. I earned my real estate license in 2014. And I always tell people that for 3 years, I had two full-time jobs. So I went to school from 7:30 to 3:10 every day. And then I started meeting with clients as soon as I could walk out that door from, 3:10 till like evening time. So I never treated it as, part-time. In my mind, it was, two full-time jobs that I had. It worked out perfectly. We had our first daughter in May of 2017, and I did not go back to teaching after that. So I was done with that. There was no way for me personally to have, two full-time jobs and also be a mom. So real estate just worked out perfectly for that because I worked very, very hard and very smart to build my business during that 3-year time period, so that I would not have to go back to teaching. I have two master's degrees from Wilkes in educational technology and instructional technology. So I've always had a passion for technology and teaching others. I like to do different Zoom courses, market center courses. I'm still very passionate with the teaching side.
That's awesome, Katie.
Yeah.
Man, you've already accomplished so much, and now we're going to talk about this whole world of investing and what came after you started to go full time. But before I get there, you told me that you have a favorite quote. Could you share
I
your
do.
favorite quote with everybody?
Yes. So anytime that I, do a Zoom, teach a course, I always love to start it and end it with this quote. This quote has been on my whiteboard in my office for years and years. And we know as agents, we have awesome days where everything is going perfectly. You're calculating how much that paycheck's going to be for, next month. And then we have awful days, where like every phone call, every text message, you just want to like cry or scream or do both. So,
Or laugh
um,
awkwardly
yeah.
about the cops coming to
So the quote that I love, is from Anne Frank. It's be happy with what you have while working for what you want. And I'm going to say it a second time just so you guys can all soak it in. It's be happy with what you have while working for what you want. So for me personally, this is a wealth building call, so we're going to, focus on that topic. I mentioned that I was a high school business teacher for years and years. I think it was like 12, 13 years. And my teacher paychecks every 2 weeks, roughly my teacher paycheck was about $1,500 every 2 weeks. And then, I started selling homes and I started making more money. And, it was more money than I ever could have dreamed of, from being on that teacher paycheck where it's like, every 2 weeks, 1,500, 1,500. In 2022, I had my very first month where I had a great month and I made my full teacher salary. So like, when you get hired and they say you're going to make $66,000, for your contract. In 1 month selling real estate, I made that much money. And to me, it was just like blew my mind, life changing. Um, but also, what was I going to do with that money? You want to be smart with that money, going shopping, going on trips, buying cars, like those things are fun, but they're not smart. Um, and, I've been on these wealth building calls now. We were trying to figure out when they started, like 3, 4 years now, probably.
I think it's 4 years now.
Yeah.
I think right around COVID is when we got them going, and we're five
Mhm.
years into that. So I think it was the January after everything got shut down for COVID. So yeah,
Okay.
yeah.
Yeah, so it was just, great for me to be surrounded by people just sharing so many things about wealth building. And I was just very new to it because, I was that paycheck to paycheck person where, I was good with my finances, but I was very limited, to what was coming in. I always had a part-time job. I was a bartender for years and years and years. I think some of the best agents out there have been teachers, bartenders, servers, nurses, coming from that like service field, but like that hard working service background. So
Yeah, I agree. You also serve, Katie, on your ALC as the financial chair. Can you talk to everybody a little bit about why that role is important to you and what benefit you get personally from that?
absolutely. Yeah. So when I was a high school business teacher, I taught a personal financial management class that every student had to take. And it taught them very simple but very important life skills like how to write a check, what credit is, what your credit score is, how to interview for a job. When you get that paycheck, what happens to all of that money coming out of it? Just so like all these life skills that, when a student graduates high school or even when they get their I can't talk, first part-time job, and they get that paycheck, it's like, what do I do with this money? Things like even taxes too. So, and I had so many students come back to me after they graduated and they're like, Mrs. Broskey, like your class is how I know how to write a check, which I never thought that I'd have to do. But we all know that there's some times when we have to write a check and we can't, Venmo or Cash App people.
Yeah.
So it's just teaching people those life skills. I'm always passionate with teaching, helping people grow. So with the ALC in my office, I've been the finance chair. I've been on the ALC for 7 years. I was a KWYP chair. We tried that for a year, maybe like 2 or 3 years back, but all the other years I was always the finance person. So I always look at bringing in value to our office. If there's any other ALC finance chairs out there on this call, please reach out to me because I would love to just chat to see what you're doing, and share thoughts, share plans back and forth. I'll type in the chat here when I get a chance, but the best way to contact me, the quickest way, is if you follow me on Instagram, I'm at Katie Broskey Realtor. And on Facebook, my personal is just simply at Katie Broskey. If you DM me on either one of those, I pretty much instantly see it. So if, after this call, you have any questions, if anybody wants to just, follow me, you see something that I post, feel free to reach out at any time. I'm always happy to share anything. Um, but back to the ALC finance. I did a investing series. It was called Investing Just Do It. And we did part one and part two. So part one brought in a financial planner talking about, investment options, how to, some options that they have to help, plan for your future, your child's future, what to do when you're not working, what to do when you have extra money. We talked about like what a SEP is, all that kind of stuff. And then the investing part two was investing in rental properties. So Michelle was actually our guest speaker for that. And we were talking, planning for that. And I was just like, I really want to bring value to the market center and, kind of share my story, have you share your story for me being on this call, um, I've just learned so much from so many people sharing their stories. And I always think that everybody's sharing like their step one, how they first started, how they bought that very, very first property. Where did the money come from? How did they do it? All the details. I think that that's so important to share. Because there's so many people out there that are just, they want to own their first rental property, but either they don't know how, they're too nervous, they're scared. And I know for me personally, like these calls just helped me so much, take that first step. Um, so when you came and talked to our market center, we focused on how how we did that very first step.
Yep. Yeah, I mean, I think you guys probably know my story, but when we were saving for our first investment property, I saved $500 a month for 4 years. That was how we saved the money. It wasn't like a big lump sum at one time. It was just this goal that I had, and it took 4 years to do it, and I was so like, true transparency, I was so nervous about buying our first property that I literally threw up the night before because 'cause I'm, like, sitting there like, "I've saved 4 years to buy this property," and I was so nervous, and I was a nervous wreck, and my husband Josh is like, "This is gonna be awesome." So I think that everyone, and Katie, what you and I talked about when we were prepping for this call was how different everybody's stories are, and
Mm,
that your financial goals are really so unique to you. And so when we've had these calls, we've brought in so many different people over the years. We've brought in people who have 300 plus stores. We have people who are running huge Airbnb businesses. We have people who have, thousands and thousands and like whatever. But like Katie, I think that the one of the more important things that we have done in this group is we have allowed people to feel like it's okay to just start, and I think that that's the beauty of your story. So why don't you tell everybody a little bit about your story, how you got started, and why
sure.
this is so important to you?
Yeah, definitely. And while I start to kind of share my story, if everybody, who's not driving wants to comment in the chat, either a yes or a no for like, yes, you own rental properties or no, you don't, just so we can kind of, get a quick feel to who out there is, wanting to take that leap and who already has. So all right. So, like I mentioned, I was a high school business teacher for quite a long time. And then, real estate happened. I did not go back to teaching. This is our new kitten that we just got, and he's crazy. That's Addison's cat, Simba, and I didn't even think to close him in a back room. So if he starts jumping around. All right. So, I did not go back to teaching after those 3 years. And I am a very like budget spreadsheet type person. So for me personally, I said I wanted to have 3 years worth of mortgage payments saved up in a separate savings in order for me to leave teaching and be comfortable. Because, what if you sell 0 houses in 1 month, which is very common when you first start. So for me personally, that was one of my goals to be comfortable to not go back to teaching and, have that paycheck that came week after week. So when I, really started to pick up with my sales, my production, my GCI was starting to, get higher and higher. I always like to like save as much as I possibly could. I was always interested in rentals, but it scared me just because I didn't know how. Like, I just didn't know like how the whole thing worked. I was like, well, what kind of loan do I use? Should I save up and buy it all cash? Like, how do I write a lease? Where do I get it? Like, I didn't know anything. So being on these calls helped with that. I have some friends who also own rental properties that kind of like talked me through it. And when I had, a lump of extra cash, I was like, I'm ready to do this. So, my husband and I invest in single family rental properties that are long term in a town here in Berks County called West Reading. So, if you Google West Reading, it is this awesome little bubble. It reminds me almost like a mini kind of Westchester feel, like with that main street where there's like restaurants, bars, shops, breweries. The Reading Hospital is in walking distance to it as well. And it's also in Wyomissing School District, which is one of the, most popular school districts in the county. It gets ranked very highly in the state as well. So there's a lot going for it. Your pool of renters, it could be people that want that school district, people from the hospital. They are typically, so the town of West Reading is kind of made up of these older row homes. Most of them are built, the earliest is probably 30s. They span like 30s, like 1930s through like 1950, your typical 3 bedroom, one, sometimes 2 bathroom homes. Um, and my very first rental that I purchased was with a seller that was just blindly reaching out to me. They were an investor that lived on the West Coast and they wanted to sell their property that already had a tenant in it. Um, Now, I used to live in West Reading years and years back, so I kind of like know the different streets, know the area, loved it, and I was like, this would be the best place to purchase a rental property. But the market there's always been pretty hot, where multiple offers. A lot of times, if you're not a cash buyer, you're going to get like pushed out of it. Um, so this person from the West Coast called me and they said, hey, I want to sell this property. It has a tenant. So I went, I met the tenant, and oh my gosh, it was one of the nicest West Reading townhomes that I've ever walked through. So it was, if people don't take care of them, they're just, grungy. The whole thing needs gutted. This had a beautiful kitchen. The third bedroom was actually not the super small, typical like West Reading third bedroom area. It was just perfect. And they wanted to get rid of it. And I had the cash. So I was like, would you consider selling it to me? I'll give you fair market value. I won't charge any realtor fees. Like I'll just basically do the paperwork for us. And I would plan to keep the tenant because they had an awesome, awesome tenant who is still there. So that is how I purchased our first one. Now, I had been so pumped and ready to like own a rental, but just like scared with all the details because I am a super, super detailed person. So I have a couple friends, that own multiple rental properties. And my one friend, she was like, Katie, she's like, just do it. Just buy it. She's like, stop asking me questions. Like, just do it. And I was like, yes, I'm going. And like, it kind of just like fell into my hands kind of thing. My husband, so as far as like spending wise, I'm more of like the risk taker, the spender to a smart point, like I don't like blow all of our money kind of thing, but I'm the more fun one, and Matt's like, well, we have an extra $60,000. Like, why don't we just keep that in our savings to have it in our savings? And I was like, well, it's not making us money. So he was the one that was kind of like more scared, like, what are you doing with that like $60,000 cash? And I was like, we're buying a rental property. And this one was, very, very turnkey, didn't have to do any work with it. Tenant was there. So it kind of just like fell into place at the right time. From being on these calls, what I noticed people say over and over and over is, as a realtor, as an agent, a lot of times we're the very first eyes on a property. And you should always be thinking, hey, should I buy this? You know,
Yep.
like would this fit my needs, if I'm looking to purchase any type of rental property. And I didn't think that way until I had the extra cash. So I financed it with a local bank, conventional mortgage. We have it in our personal name. We had to do 20% down, conventional. At that time, I paid, I want to say 160,000. So market value right now on that same house, I just pulled a HELOC on it, which we'll talk about later with some of our things that we're doing with our rental properties. But the appraised value came back at like, was it like 234,000? And we purchased it at 160, 20% down. So the equity is, very, very strong. And that was back in 2022. So
Which
that
I think
that was the
I just
first
wanna
thing.
kinda I wanna just slow down on that point for a minute because I
Mhm,
think a lot of people have a misunderstanding that you can't pull a HELOC on a rental property, and that's something that, like, you when you and I were talking, you were like, you had found a deal through, I think you said Fulton had that
mhm,
loan. I know we're gonna go into it, but I just feel like it's like, it was really smart how you went about that to, like, kind of unlock some equity and, um, yeah, I think just well, we're gonna get into it, but, like, the
mhm.
fact that you could actually pull a HELOC on a rental property was something that, I think was just a really important point that you just made.
Yeah, yeah. Yep, so that was rental property number 1. So for me, I was like pumped. I'm like, I want to buy 10 more, like this is perfect. I have the perfect tenant, nothing's breaking, nothing's going wrong. And it was kind of like getting my husband like up to speed with it too. Where I was like, see, it wasn't that bad. And now we're like, making profit each month. So we own 5 West Reading single family homes total. Um, I'll real quick just go through how we got the other 3 because those are real fast. And then I can talk about the special number 5 that just happened last week. And Michelle, you can talk about your most recent one too, because we both have like really cool stories to, share with that. Um, so my rental property number 2, same thing, conventional loan, local lender, 20% down. My number 2 is across the street from the first one that I purchased, and that was just a straight MLS listing. So there were competing offers. It was a family that lived there. Another agent had it listed. Got it that way. That one needed a little bit of work done. Um, so I had to, pay the cash to close, and it was about another $20,000 of work because it needed like new bathroom, new, flooring. But then my numbers 3 and 4 were like 1 or 2 streets over, still the West Reading area. And they were both clients that purchased those properties with me previously. And then the one client got a new job. The other client was like downsizing to something even smaller. So they called me to sell their properties. And I said, oh my gosh, like I want to buy your property. And I went over numbers with them. Um, when I do that, I don't charge any realtor fee for it because I'm just, grateful that they want to work with me, that it's adding to my rentals that I have. Both of those numbers 3 and 4 were very, very turnkey too. So in my like, dream world, I don't have to do any work to the property. It's like maybe some paint, change the locks, and it'll, rent out very, very
To
quickly.
bust out ceilings and make your husband breathe in plaster. All right, I gotta show you guys this because you're not even going to believe what I'm about to show you.
Yes.
Um, so okay, so Katie's talking about turnkey properties. You guys, look at this one. I mean, I can't even believe that this is real. Are you guys ready to see the most incredible ceiling that you've ever seen in an investor property ever? All right, check this out.
It
Look
looks
at
like
that.
a cave. It looks like you're inside, like
What is that ceiling? Like, seriously, has anybody ever seen anything like this before? And what do you call this type of ceiling? Like, I'm like legitimately very curious. What do you call this type of ceiling? So
That
this
actually
was,
freaks me out. It's like crazy.
it is so weird, right? Like,
it's like
so
worse than the worst popcorn ceiling that I've seen,
I have no
like
idea. And you can't really tell because of like the scale of it, but it's like 4 to 5 inches each one of those like
like glaciers.
Like, I don't know. What do you call that, right? So then Josh sends me an update today. So this is what it looks like right now. It's a disaster.
That's great that he got it all down though. I mean, my
Yeah,
goodness.
he did get it all down. He came home so sore last night. Oh my gosh. But I've never seen a ceiling like that. So Katie, you're buying turnkey properties and I'm going out there trying to find the craziest freaking ceiling I've ever seen in my life.
I love it. The after pictures are going to be so great though.
I cannot wait till, I mean,
You will have to
it'll,
show it on the next call.
yeah, but by the next call, everything will be done because our goal is to have it done by April 1st.
Yeah.
It's just, it is like literally insane. I've never seen anything like it before, but that's just the land of real estate investing, right?
I love it.
So Katie, you now you're up to 4 investment properties,
Mhm.
and then last week you bought number 5. So talk to me about number 5.
I did. All right. So, if we can backtrack a little bit to 2023, like, so for me personally, I've been a mega agent. I've been a top 100 for like the past maybe 4-ish years now. And my 2023 was the first time. So I got my license in 2014. Every year since then, my business has increased. I've never had a decrease. 2023, I worked so hard. Like I'm talking like that grind where it's like your first, 1 to 3 years. Like I worked so hard and I had a crappy year. I didn't even make mega. Like I ended at like 9 point something. I was so mad because I was like, oh my gosh. So my 2023, like my savings was lower than I liked it to be. So I didn't purchase any rental properties then because I was like, I don't want to pull a big chunk of cash. Um, I get kind of crazy with liking to have a certain cushion in my like personal savings that I can just grab from if I need to. That's not like tied up in money market or like any of that kind of thing. So there are 2 properties that still haunt me that I listed from clients that I should have bought as rental properties in 2023. I still like lose sleep over it, but I was like, there's just no way. I was scared of hard money. So I didn't want to go that route with it. And they haunt me to this day. So I talked to a couple of my friends who purchased rental properties, and my one friend, she's like, "Don't you ever pass that up." She was like, "Call me. We can like I can
Was
buy it, flip it back
this
to
was
you."
Janelle?
Yes,
It
yes.
sounds like Janelle. I don't know Janelle Logan. She's going to be our Wealth Building Wednesday guest in a couple of months.
Yes,
Yeah.
Janelle would be an awesome person on this call. Yes. So she was like in like her language, so there's like the F words like thrown in. She's like, Katie, she's like, don't effing ever do that again. She's like, you call me, we'll figure out a plan. I'll help you some way, somehow. Okay. So that was 2023. And those 2 properties that I didn't buy to this day make me sad because I'm like, oh, I had them and I just couldn't get them. All right, so fast forward now. I have a tenant who I love, who was close to her neighbor that lived right next to her. And her neighbor went into assisted living and she was talking to the family, and the family's like, we have to sell this property. This money has to pay for like the like nursing home bills. Like, we don't know who to call. And my tenant gave them my name. Now, the West Riding market has jumped. You cannot buy a property. It's very, very hard to find anything under 220,000. When I purchased my other 4, they were all around 160,000 in like 2022. So the property values have jumped a lot. For me, at this point, I don't buy them yet in all cash, so I finance them. So I have to look at what the mortgage payment's going to be and what I can pool for rent. So if I would buy a property at like, the 230, 20% down, the numbers to me don't make sense because I like to make some type of profit. Like if I'm paying out of pocket for the mortgage, I'm not comfortable with that when I look at the breakdown for it.
Definitely would make sure that there's a little bit of cash flow there for sure.
So I like some type of cash flow. And when looking at these properties that get listed, I was like, am I done buying in West Reading? Like, what's going to happen here? Like, what should my game plan be? And then I got a call to go see this house. Now, this house, this man lived in for 40 plus years, maybe. So you walk in and it's like the old carpet. He smoked in the one room, all the wallpaper, like you just want to like gut everything instantly when you walk into it. All right.
You don't want to touch anything. You want to change your clothes.
Yeah. But it's West Reading and it shares the wall with a unit that I own. And I was like, and it has off-street parking. Some of them don't have off-street parking. It has off-street parking, which is also a big plus for that area. And I am just like, I have to get this. I have to make it work. What do I do? And because my 2023 wasn't the best, my 2024 was kind of my like rebuilding my savings and numbers that way. So I wasn't quite ready to dump it into a rental, because on a selfish level, I'm also redoing our kitchen, which I am excited about, but there's really like, my kitchen's not paying me a rent check kind of thing, but I want a new kitchen, so that's kind of where my money is focused in for 2025. But then this came up and I was like, I have to figure out what to do. So Janelle was my next phone call and I went over everything with her and I was like, all right, I had my like lender run different numbers. These people just wanted to sell the house. I had two different contractors walk through. Both of them said, hey, it's going to take about $50,000 reno. They're both contractors that I know and trust. So to have them, both come back with that, I was like, all right, it's going to take about 50K to bring it up to where it should be so that it can get rented out. The people were very happy to sell it to me for 150. So
Okay.
all in, it was 200. So I had pooled a HELOC, which we can talk about briefly, pulled a HELOC on my best rental with the most equity, which was that very first one that I bought. Now you can pull a HELOC on a rental property, but you have to find a bank that does it. So there were a couple credit unions that I was talking to with like other different things, and a lot of them for 2025 or the end of 2024 stopped giving HELOCs on rental properties. But I found Fulton actually. They have a lot of great different loan programs here, does HELOCs on rental properties. Now, the LTV is a little bit lower. The LTV, I'd have to look back at my paperwork, it's either 70 or 75% for rental properties. For your primary, they give 85. So for your loan to value, it's the equity in the house, and then it's, 70% of that, pile there. So you're not getting all of it, but you're getting some of it. So I had pulled a HELOC just to have, I wasn't going to pull any cash from it, but just to have if anything popped up, if a rental popped up that I wanted to buy, if something crazy happened with the kitchen, just to have. I think every person should have a HELOC pooled on a property that has equity that they own, and you don't have to touch it. So the cool thing with it is that there's no monthly payment until you actually start to pull money out of it. And then once you pull money out of it, it's an interest only required payment. And what Fulton has is that you have to pay the whole loan back within 10 years. So I feel like we could do a whole call on that, but I'll just kind of like mention that there. So I had this HELOC pooled and I was like, all right, if I get a mortgage for 150 and then I pull the cash to close from the HELOC, the numbers didn't match up. Like it was still too high. It was more than what I could charge for rent. And then Janelle's like, all right, sell it to me for this. I'll fix it. I'll flip it. I'll put the money in it. I'll flip it back to you and we can hard money your cash to close so that nothing's coming out of my pocket. But for it to work for her, she'd flip it back to me for that price of like that, like 20, 215, maybe if we could get it a little bit lower. Again, the numbers still didn't work. So I was like, shoot, I was like, is there any way to make it work? And then I found out that Fulton has a renovation loan program, which I had never even heard of. And it's not like the FHA, what is it, FHA 203, whatever that number one is. It's not that. So you get the purchase price for the property, and then they put the amount for the renovation into the loan, but how the monthly payment came out. So all of my other monthly payments for the other two options we're coming out to around 1,900-ish dollars. And I can charge like a 1,950 to 2,000 per rent. So they were just like real close. And I was like, I'm not comfortable with it being that close because I feel like the rents there are eventually going to hit a ceiling where it's like people aren't going to pay, $3,000 to live in West Reading. But for the rental loan, my monthly payment was like 1490. So I was like, this is perfect. This is like what I need to do. Now the paperwork that you have to do with the rental loan. So the catch is that I had to put 25% down instead of 20. You have to have a contractor that is quick, on the ball, and has all the paperwork and all the tax information about their contracting company, or it's not going to work. Because my contractor was not on their approved contractor list, but no way was I going to use some random contractor that I didn't know. Um, so because my contractor was awesome, doing all the paperwork, all the things, everything went through with it. And they give them certain draws. So like the first draw is like $10,000. The contractor like buys what they need, then the person comes out to check it. So I can say it was, a pain paperwork wise, but now that that's behind me, that was the best way to do it. And if I never knew that this type of loan was even out there, I probably would have passed on the property because I didn't like how the numbers came back with it. And now like I can talk to my clients because I have the experience of going through personally this whole loan process, what they asked for. Towards the end, they were asking for a lot of tax stuff where I'm like, are you going to say I'm not approved for this loan the day before closing when like you said it just made me nervous, because I'm like, well, why are you asking for that? But everything worked out. But I think it's great to go through a process like that because then you can really talk to your clients, um, friends, like
I
on a call like this, just to be like, oh my gosh, it is possible. Like I figured out how to make it work because I was going to be so upset if I couldn't buy this property that shares the wall with my one other property.
Yeah. I was sharing with you, Katie, that we found one as well that was a little bit, it was more than what I've ever spent on an investment property before. And
Hmm.
so what we decided to do was something similar. And up until this point, up until this point, we've been using cash to buy a lot of our properties. And I think I was telling you the other day, I got to a point where I was like, okay, like I have enough income coming in now to cover the things that I wanted to cover, and we hit our 10th one. So we just settled on our 10th investment property on Valentine's Day,
Yay,
which was,
congratulations.
thank you. So we settled on that one. And this one we did differently than we had been doing the last couple. So the last seven we bought straight cash. And then this one we actually did finance. And I went through a company called Kiavi. I'm gonna drop the link for you guys so you can check them out. Um, so with Kiavi, we actually bought our property through an LLC. They needed our operations, like our organizational documents for our LLC. They
Mhm.
needed very little info. Like it was actually like kind of crazy, but this was what they're called a DSCR loan. So a DSCR loan is they're basically looking at the house as an asset. I did not have to do a personal guarantee, Julie, on this one. But they were looking at, they have a rating of how they calculate what a DSCR number is, and basically anything over a one means that the house is can cover its own debt service.
Mhm.
Think about like we're buying a rental property. We bought it for 160,000. All in, the mortgage is around 1,200, I think, but
Okay.
the rent will be 1,800. So there's that
Mhm.
$600 passive income in there. So the DSCR on this loan was like a 1.3, and because it was so high, they actually lowered the rate that they were offering me because they were like, "This is a really good asset, and if
It's a
anything
good one.
happens,
It's a good
right, like
rental. Yeah.
they just get to take the house back." It was 20% down that we had to come up
Yeah.
with, which was a lot less money out of pocket. And
Mhm.
so it was like one of those situations where we kind of changed our mindset to protecting our lifestyle to building the business. And that's like I don't know how else to explain it. It's just I'm looking at that one a little bit different because
Mhm.
with Kiavi, like just I would just say like if you don't have an account, just sign up, because if you go in, it'll let you do all kinds of calculations. It's a great dashboard. It just gives you a lot of information on how to do things, and it was super easy. Like it was probably one of the easiest processes I've ever gone through, and it was very eye-opening to me. They also have a similar loan that you talked about where we just did a regular rental loan, but they
Mhm.
also have a loan where it's like a fix and flip loan as well. So there's definitely options out there. So to your point, like don't pass on a deal because you don't have the cash. Like there's ways that you can get the cash to do it. And I was sharing with you, we bought it for 157 and they did an appraisal and it appraised for 185. So
Yeah.
we were walking into this deal with instant equity, which we would not have been able to, we would have had to pass on it if we were just going to do it straight cash. So I think
Yeah.
that there's just different ways to look at it. And I always said, now I told Josh that every year for Valentine's Day, I want to invest in a property. So that's
Perfect.
I want to do.
Yeah. And that like brings us back to the point too of I always find it interesting with rental properties, with people that have a smaller portfolio. So, not somebody who has like 50 doors, 200 doors. Do you keep the rental properties and do you purchase them in your personal name or do you LLC them? And different investor friends that I've talked to, a lot of people have really strong different feelings with doing it different ways. So like for me personally, all five of mine have been bought with a conventional loan in our personal name. I had looked into going the LLC route, but I was not comfortable with the commercial loan with the ARM because the adjustable rate mortgage just freaks me out, and I'm
This
glad I didn't.
is fixed right now. Yeah.
Yeah. So that scared me. And then just the, commercial policies that you have to have on the property. What I do personally is I have a really large umbrella policy to cover, if anything would happen. And we actually just upped that to like an additional 3 million coverage. Standard, a lot of people have 1 million on their primary property. And I paid a little bit of an extra fee. I go through Erie for all of mine. Um, but I do it that way. But then I've, also talked to people where it's like, well, they tell me like, hey, Katie, like once you get to a certain number of properties, you're going to want to flip over to LLC because your, policy that you have now, like just isn't going to cover it. Like you kind of max out of it.
Yep.
But then you're also on your side, you're purchasing yours cash too, which I think makes it, gets that mortgage piece out of the way, which is like what I
Yes.
didn't like.
So what we do is we buy ours cash and then we put them in our trust, which gives us the same protection that you would get if you were having the LLC. Plus, we have the umbrella policy on top of it. So because it's in our trust, it's a little bit different with how the asset's protected. And my attorney would have to tell you what that is because I
Yeah.
have no clue. But I just pulled up the rental property stuff for ours. So we have the personal umbrella policy through Selective for $3 million. We also have $3 million worth of
Mm,
coverage. So for $3 million, ours was $750. So
yeah.
it's not a very expensive thing to do, but it does give you that total peace of mind of like
Mm,
you're covered if something else happens. Katie, I want to go to the chat because there's a couple of questions in
yeah.
here that I want to make sure that we answer. So
Sure.
um, there was one from Susan. And Susan says, Katie, do you have an amount that you like to make monthly between mortgage and rent amount, or do you look at it to more cover cost and long-term plan and someone paying the mortgage off?
Yep. So when I have my lender, run like an estimated cost to buyer sheet, I like to see $400 plus. And that's just like a number in my mind that I'm comfortable with. If I look at the mortgage payment, and everything's escrowed into that. And I look at what I can charge for rent. If I'm making 400 or more, I'm happy with it. If I would make like 300, I might still be good with that. But like once it gets too low, I'm just not comfortable with it. What I try to do with the profit is save it. And I know that you've told us on previous calls that you keep all of your rental money in like a separate pot just for rentals. I'm not as strict with mine. Like when my 2023 just sucked and I was working so hard and not making what I'm used to like making, like there were definitely months where I was like, you know what, I'm gonna pool my 2000 profit to like pay for the mortgage on my current property. So that I wouldn't have to pool from my other savings with it. Um, but I try to build up. I have a savings that I do have built up in case something does happen. Typically in West Reading, if you're buying older row homes, West Reading does not require a sewer scope, but those darn pipes that
Yes,
connect from the
no.
house to the
Dallas
street.
is the same way, buddy.
Mhm. I have learned more about those pipes and replacing sidewalks than I want to. Um, because one of mine went, it cracked, and I get a call from the borough. So it's like anytime the borough calls me on my phone, I don't even want to answer. I'm like, why are they calling me? And it's like, we think that your water pipe burst and we jackhammered the neighbors out and the neighbors is fine. So we think it's yours. And I was like, well, the poor neighbor. And then, but my insurance policy covered it. So a tip that I can give you is on the, homeowner's policy, make sure that you have the sewer backup rider because the sewers in West Reading are also known for backing up. You won't be covered if it backs up. And then also the rider that's going to cover the water sewer pipes from the house out to the street. If I would have had to have paid out of pocket, it would have been about $6,000 because it was the sidewalk, the pipe, the digging, like all this crazy mess. And my plumber was able to write everything up so that it was, the age of the pipe so that the insurance did cover it. And I think I only paid like maybe 300 out of pocket and I could have had to have paid 6,000. So having the proper coverage on your properties, especially if you're public water, public sewer, is just huge. And even my, clients that are just buying a normal, primary home, if it's public water, public sewer, I always tell them that story and like, hey, check, add the rider. It's so cheap. If and when something happens, like worth it.
Yep, for sure. The next question was from Lexi, and Lexi says, is a HELOC better than a cash out refi? And I had replied to Lexi saying that with a HELOC, you can keep your current rate, which can keep your monthly payment down versus refinancing and going higher. And
Mhm.
then the other side of that is if you had a rental property that you bought when rates were in the threes or fours, you may not want to cash out and refinance that and go up to a 7.25% interest rate right now. So I think that it's, you can get the benefit of the access to the equity with also still maintaining the interest rate that you have.
Mhm. And, definitely find a lot of times your local banks, credit unions, they're going to give you the best options for a HELOC. If you have equity in your primary, you're going to get the higher loan to value ratio to have it on your primary. But I think it's awesome. Like now that my loan closed last week on rental number 5, I'm actually going to pool a second HELOC on the other rental because the process was so easy. It was so
Yeah.
easy.
And I
Um,
think you're spot on about, and Susan also said great advice on having a HELOC. If you don't pull the money, a lot of times you don't have to make a payment. Like there's no interest that's
there's
due.
no fee.
Just
Yeah.
there in case you need it. So,
Hmm.
um, especially when you are doing a bunch of these, to have access to something like that is important, just in case the worst case scenario.
Yeah.
So, I think it really depends, Lexi, on what is your current rate of the property that you would be pulling the HELOC on. And does it make sense if you have a high interest rate and you want to refinance down like that? Yes, absolutely. Right. But if it's like you have one that's a little bit better, then you're good. Um, Katie, are all of your rentals yearly rentals?
Yep. They are all long term. Like my dream is to have that tenant that's like, I want to be here for 2 years. I want to be here for 5 years. My tenant for the new rental property wants to be there for like a 5 to 6 year time period. So short-term rentals are not my jam. Some people love them. But I am comfortable with the long-term.
Yeah, that's the same. I haven't gotten into the short-term rental game yet, but
I don't want to deal with all the flipping and the cleaning and
well,
people
it
messing
makes
stuff
it
up.
Mike Caperna said, "How quickly do you pay the HELOC off as it's interest only?"
So that's like your personal plan, like what you want to do with it. So I spreadsheet out everything. So like if I was to pool the HELOC that I got was close to 60,000. And I think if I would pool that full 60,000 out, my interest only payment, I want to say my rate was like an 8.5. My interest only payment was somewhere around $480 per month. So when I was looking at that to compare my numbers of what to do, I was like, all right, like this will hold me over for a little bit, but you're only paying interest. So don't trick yourself into thinking that's your monthly payment. You have to have the whole thing wiped out in 10 years or less. So then you'd have to come up with a plan of, I'm going to sell a bunch of houses to pool and, put maybe 10,000 extra every month into that to knock it back down. So you have to be smart with it. It's not free money, but it's a great tool. Like when I purchased my primary property, my previous house, I think we had like 200K equity in it. So we did the trick of pulling the HELOC, using that cash to buy the new home. So the new home was contingent on nothing, sell the old home, wiped it off. So I carried it for like 1 month kind of thing.
Yeah.
But definitely plan it out.
Anne has a similar question, and she says, "Are you trying to pay the principal on your rental mortgages? How are you saving to buy the next one?"
So I go back and forth with like I hate monthly payments. I hate monthly payments on anything, whether it's like my car, a house. Um, and what the experts always say is to pay down your highest interest rate first. So I am looking at focusing on one of the rental properties. Obviously, the one that I just purchased has the highest rate on it. I had to put 25% down, which at the time I was like, oh, 25, versus 20. But now I have less to pay off on the highest rate. So, and I'm going to be getting my highest rent on that property. So I would like to focus on getting that one paid off first because then the rent that I'm going to get is 1950 per month. So then that's just, coming in. And then I would come up with a plan. I mean, my ultimate goal is to be like mortgage free on all my properties. But that's definitely going to take a little bit of time and a lot more houses for me to personally sell to just knock that out of there. So, but
I had
that would be
I
my
was
like
talking
goal.
I was talking to one of my friends, and she said that her goal is every third house she sells, the entire amount of that commission check goes to paying off one of her rental properties. And I just
Okay.
thought that, like, how she, like, had it in her head, like, I'm gonna keep 2 and then basically put away 1.
Okay.
That's how she saved money to buy her first ones, and now she's a little bit older than us, so she's in, like, complete payoff mode right now. She's not looking to acquire anymore, she's looking to
Yeah.
pay down. But I just thought that that was, like, such a cool way of thinking of it. So she
Mhm.
sells 100 houses this year, which she will, right?
Yeah.
30 of those commission checks will go to paying down like her debt, which I thought was just super cool.
I
Okay, just like a way,
love
like a
that.
trick that she's playing with herself.
Yeah.
And so what she said that she's trying to do is like when there's like a big, like when she has like a, $2-3 million house that she sells, she wants that
Uh-huh.
to be one of the thirds. So she's like automatically taking that money off the table. It was just, we had a really cute conversation about it.
Yeah, no, that is great. And like it's just like you and I talked about how sometimes I think people focus on how many doors they own. So being like, I own 50 doors, I own 20 doors. And I really think that people need to look at what the money is, your profit that you're bringing in from that, because I could buy 5 more doors, and have 5 more mortgage loans that I have to work on paying off. Or I could pay off the 5 that I have and be making just as much, if not probably a little bit more than if I had, 10 rental properties with mortgages versus 5 paid off, just cash flowing into me. So I think you really just have to like look at your own numbers. And like going back to the whole like ALC finance thing too, it's like you want to look at your profit. Like your GCI might be so high, but if you're spending that money, like, and your GCI is 400K, but you're really bringing home like 50,000 at the end. It's like that same like mindset that you have to really look closely at the numbers.
I think about it like this. I You can go into every year having almost a guarantee of how much GCI you're going to make. So if you think about being your rent as GCI as a real estate investor, if you build your GCI up, it's kind of like residual income, right? So if you think about it this way, like for every and your GCI is the total amount of your rent, right? That's not your expenses. It's like if you run it like you would run a millionaire real estate agent team and you follow the MREA, right? So if you're bringing in your GCI is, if you have 10 houses and your GCI going into the year is 250, you know that you've sold 25 houses or whatever it is before you even entered into the year. So that's
Yeah.
kind of like how many houses do you have to sell a year to make your income goals, but then you can play that same game of how many homes do I have to rent to get the GCI that I need to hit my income goals. And so it starts to become like it's a different game that you're playing, right?
Yeah.
Still a lot of fun. And you don't have to work on weekends as much. But you do have to the township when they call and tell you that they busted open the door.
Yeah. Yeah.
Uh, Linda says, is it advantageous to buy townhomes where the roof is covered by the association? Just thinking about large ticket items. I'm going to let you answer that, Katie, and then I have a very strong opinion on that as well.
Yeah, so me personally, investing in a property that has an HOA is like a whole other ball game in a way, because it's like, what does the HOA cover? What do they not cover? A lot of times they limit the rental properties. Is your tenant going to pay that HOA fee? Are you going to pay it? So it's a whole numbers game. For me personally, I'm focused on that West Reading bubble, which is not HOA. So I can't speak much more than just knowing about buying and selling houses that are in an HOA.
I had one in an HOA that I have sold because the HOA I just couldn't. I could like their financial, how they were managing money, what they were charging us, how they were like I couldn't. That's just not HOA is not for me. I'm too I want to do things my own way too much. And
Mhm.
this particular HOA was trying to charge the owners to repaint the outside of the building that the rental was in, and that was going to be a $1,600 special assessment on top of a $400 HOA. Like it was just
Yeah, some of them
there's
get,
no way to
yeah.
actually protect the cash flow in that situation, in my opinion. So I sold that one. I didn't hold on to that. I was like, I'm out. I'm out.
I
Katie,
mean,
we
the
are at
HOA could be good in like short-term rental. If you get like a pool, it's like a beach condo, like that
yeah.
kind of vibe. But I don't have any properties that I own that are like that.
Well, guys, let's give Katie a big, huge thank you in the chat channel for coming on with us today.
Thank you,
I
everyone.
loved having this conversation. Katie, I love that you started listening to these calls, that you took action. And I think that I would leave everybody with that. Like, just do it. Just go. Just
Yes.
jump. Take the first leap. You've got plenty of resources to do. Reach out if you need anything. And can't wait for our next Wealth Building Wednesday call next month. Thanks,
Yeah.
guys. Have a good one. Thanks,
Thank
Katie.
you. Thanks, everyone. Bye.